Hey guys, quick update on a long time ago actually. I think it's better part of 4 years, equity. Big macro call. I like on equities big, good quality structure setups that go for a substantial move and make a good percentage, especially where you could potentially get CFDs and a little bit of conservative leverage. And you can set up and let them go. For example, if you have a pension pot or any of those. So this was when I was appearing on Tips TV, discussed Morrison's London. The one I'm talking about here is Carnival CCL. That's the UK version of it. Let's go back to when this was posted, 9th of Jan 2015. So you're talking 4 years and 3 months now. Haven't gone back to some old clips in ages, so it's quite fun to actually do. I'm going to put this on 30% quick speed to keep it rolling nice and fast, so listen up and hear what we were saying at that point.
Let's see what we have next for you. So a big call for the year ahead. I called it on the program before, and I'm doing a reiterate today. So looking at the big charts, this is 2015. What's the one to hold? You want to have a few positions that you just bank and drop into the drawer and forget a little bit about. That should be doing you quite nicely. I called it 2635, the break of this macro monthly setup, which is a very tidy little setup on Carnival, and we have a nice little pinch even in the funnel, which I'll show you on the next chart. And I'm saying essentially this is going to run 47. So here we were at 2635 as it was threatening to break. The next slide will show us how we're doing today. So if we take a peek at that, and you can see that we called that in November for you. Since the 2635, we're actually through to 3045. Now note that that has just run the first interim. So for those of you that missed that, don't necessarily just charge in. I'm hoping that we'll get a second chance for you to get back in for a little bit more. I might like to add additionally to this. But look at that impulsive move. Look at the squeeze in the funnel. You could have got an early break, sub 25 pound. You're already at over 30 pound. So that's a 20% move in literally 3 months, and looking incredibly impulsive and good for 47. So stay long. Look for reasons throughout this year to accumulate.
Yeah, good for 47. Let's have a look. So as I say, some time ago, and well, the reason this is interesting is because we're talking about big time frame charts. This is Carnival now. This time I put it on the weekly chart, but you can recognize it the same. And in fact, it had a very, very interesting journey. So when I covered it for you, that was some period ago. And of course, this target was also made some time ago. I just didn't go back and do YouTubes on it. And of course, we'll always do YouTubes on our winners. We won't always go back and remember our losers, but actually doing the losers often tells you the most about what you might have done incorrectly. But on the big time frames, we're often more accurate. Why? Because you have lots of time to sleep on it. It's got big structure. There was a genuine squeeze. You could have got in a little earlier as well. That was the first interim that had just been run. You were literally at that point. What ended up happening, which was rather interesting and fascinating, was that you got quite choppy. Folks will remember 2015 is quite an interesting period. Quite choppy. Many people would have thought that's a head and shoulders. This is why we don't trade reversals, particularly when you're already in a macro upside HVF. Most people don't understand that. That's why you should pop over to the free webinar on March the 11th. Just go register on the marketsniper.com free webinar on how the great shorting season will come, how to defend capital, and also how to turn defense into attack. But if you've already, if you're not, trading is not for everyone. So do that if it's of interest to you, and there's no obligation, and there will be an offer available. So what did we have come out of this? You actually got a wind up structure that created a target and confluence very closely to the full target, and in the end the full target met. So that 47 that we were talking about, that was 4 years ago when we were just running the first interim. This is the nice thing. If you have a pension and you can identify super macro or big time frame, this is weekly and monthly setups. I can put this on the monthly chart. It'll squeeze the whole pattern in for you. In fact, TradingView is disappointing on the amount of data it's having there. There it'll look more like what you've just seen. You could have trousered that, as I was suggesting in the video. Sometimes you don't want to trade. Sometimes you just want to invest better. Invest better, put something, lock it up. You haven't got the time, you prefer the golf course, etc., etc. Go and do what you want to do. Get in. You could have been grabbing the long over there. You could have grabbed it over there. You ran your first interim. You got a wind up. You could have got in on the wind up even at 36. It's still not a bad run to 47 to make that return. In the end, that return was made. Small amount of overperformance, and since then we're trading down. Nice big structural setup where that RH1 happened way back in 06. 6, and you could have taken an entire time waiting and watching this form and jumped in only in 14. You could have sat and watched, guys, an 8-year pattern. An 8-year pattern in equities that you then could have bought in 14. You would have been done some time ago in 17, April of 17. That's already 2 years ago. So it's not bad. You could have sat in it from December 14. It's almost beginning 15. So you would have sat a year and a quarter in this trade. A year and a quarter. And you would have made 80% on that without any leverage. Imagine you put your pension, 50% of your pension into that one equity and did that. You've got to have confidence to do that. If you've got a self-invested personal pension, you just have a couple of stocks. You have 5. You put 20% in there. It's a great return in a year and a half. 80%. In this zero interest rate reset environment, these are things that are worthwhile. So those that say to me technical analysis is only good for timing, let me tell you, technical analysis is good. You just have to look at bigger time frame charts if you want bigger time frame trades. It's not only a timing tool for the 1 minute, half hour, an hourly, and a daily chart. It can be utilized even more effectively on monthly charts as an investor for someone who wants to lock up something for a year and a bit. And you would have picked up 80% on that as a return, not including leverage. You could have had very conservative margin leverage. You could have bought 2 or 3 for every one share you had covered in full price. You could have leveraged up 3 times. Very easily to do, very low cost of carriage, bought a CFD, done any of a number of things for in your pensions and taken out. And that, of course, would have tripled your return if you did a 3:1, and still could have been very, very defensive. Very impulsive move, moved strongly away from the stop, both this level and the original level there, and you're home and dry. Nice little wind up where you could have topped up over here. It was a little bit short of the second interim, so that was the only thing that didn't comply perfectly. Nice conferencing targets out, and then the pullback. That is how you can trade upside longs. There's more out there. We have a community that are looking for exactly that on big time frames and trading, and that was a revisit to long call from back in the days of 2014. Hope that was useful and interesting, and as I say, pop over to the webinar if you think this is for you. It can be for both investors and traders. It works across all markets. We trade cryptos, we trade equities, we trade FX. Okay, with that, I love you and leave you. This is not a recommendation, and trading is not for everybody. Play safe. Bye for now.